Welcome back, traders. In this video, I'll teach you everything about ICT breaker blocks, when to use them, where to use them, and how to get precise entries with a proven step-by-step method. A breaker block represents the final high or low that forms immediately prior to a liquidity sweep. It is also referred to as a failed order block, as it signifies the invalidation of a prior structure before price transitions in the opposite direction. Let's begin with an example of a bearish breaker block. In this scenario, liquidity is swept to the upside, and the low that was formed just before this sweep becomes the bearish breaker. When identifying the breaker, consider only the candle bodies, disregard the wicks entirely. Following the sweep, price typically retraces back into the breaker block before continuing downward toward the next area of liquidity. Now, let's examine a bullish breaker block. Here, liquidity is swept to the downside, and the high that formed just before the sweep becomes the bullish breaker. As before, focus solely on the candle bodies to define the breaker zone. After the liquidity sweep, price commonly retraces into the breaker before advancing higher toward opposing liquidity. Next, we will analyze several chart examples to demonstrate how breaker blocks can be effectively identified and utilized within market structure. Moving on to the charts, we have a 15-minute sell-side liquidity sweep. There's also another liquidity sweep visible on a lower time frame. Now, we'll shift down to the 1-minute time frame, where we will be waiting for a market structure shift. We can now see a clear shift in market structure with a defined high and low to the left. We'll mark this area as our breaker block, using only the candle bodies and ignoring the wicks. We're going long from this breaker, placing our stop loss below the previous low and targeting the recent high. Let's see how it plays out. The market retraced back to the breaker, triggered our entry, and hit our target cleanly. Now, let's move to the next example. Buy-side liquidity sweep, so we'll again shift to the 1-minute time frame and wait for another liquidity sweep on the smaller scale. We now have a swing low to the left, and we're waiting for a market structure shift. Once the shift occurs, it confirms our breaker block. We'll enter short from this breaker, noting there's also a fair value gap nearby. We'll place our stop loss above the fair value gap and target the recent low. Once again, the market respected our breaker and reached our target perfectly. Moving to the next example, 15-minute sell-side liquidity sweep. We'll drop down to the 1-minute time frame and wait for a market structure shift. After the shift occurs, we'll identify the high as our breaker block. We'll go long from this breaker, placing our stop below the low and targeting the recent high. Once again, the market retraced into the breaker, triggered our order, and delivered our target objective cleanly. Now on to the final example. We have a buy-side liquidity sweep, so we'll move to the 1-minute time frame and wait for a market structure shift. Once the shift occurs, we'll use the high to the left as our breaker block, place our stop above that high, and target the recent low. Again, the market respected the breaker, took our order, and provided a precise target completion. I hope this walkthrough has helped you understand how to identify and use breaker blocks effectively within your trading strategy. Thanks for watching. You can get the PDF of the breaker in my Telegram channel or Discord server. Links are in the description.